First of all, thank you very much, the IVCA, for this opportunity to appear on stage. This event just gets better and better every year, and it's such an honor to be part of it. My name is Angela. I'll be representing Preqin today in delivering to you a market update on venture capital market, both from a global perspective as well as a little bit on India itself. And of course, I'll also share some perspectives from the investor's point of view. And if you're not too familiar with us, Preqin is the go-to platform for alternatives assets data. We've been around for 20 years already. We serve professionals like yourselves with the most comprehensive data, analytics, and research. So we help professionals fundraise, benchmark portfolios, source funds, source deals, and just to stay on top of the market. And I'd like to offer you some resources today. If you just scan this QR code, first of all, you will get access to my presentation deck. So you can also read it on your own device if you like. And we're also offering some publications, including the Preqin's PEVC Territory Guide for India, as well as the AIF benchmarks. These reports are produced in conjunction with the IVCA. So you take your time to scan this because it will be on every slide after this. But I think I have only 18 minutes left now, so I'm going to jump right in. And just much like the IVCA has expanded beyond just VC, I'd like to put all asset classes here so we can take a look and just really marvel at how much India has grown, how far it has come as a private capital market. So as we understand it at Preqin, India is now a $127 billion market. Obviously, the venture capital part in pink is very much at the center of this growth, representing around 40% of everything now, but overall AUM has already doubled in just 5 years. And I also want to highlight the bit on the bit that is bright blue. It's private debt, even though it's not the focus of my presentation. I feel like it would be strange not to really point that out because it's such a buzzword now in alternatives. We hear, on stage and off stage, it's such a important topic for India, very well positioned to capture the upwave. So you can see how it has now tripled in 5 years. And I think a while ago I was still seeing how India-focused private debt has tied with China as this largest single country-focused AUM, but the data now clearly shows that India is very much in the lead. And one more thing I want to highlight is this shows India-focused funds data. So I think if we add up India exposure from the Asia pan-regional funds as well as the global diversified, the actual number will be even higher than this. So what's been driving a lot of this growth clearly is investors seeing the potential in India. And this chart comes from our Global Investor Survey. We conduct and publish this survey twice a year, so it's a very good way for us to keep track of how investors' preferences and concerns are changing. And this is a question on which emerging markets do you see presenting the best opportunities in the next 12 months. You can see very clearly India is the top choice across asset classes shown by the different colors there. This place used to be China, maybe up to 2 years ago, but very clearly now we can see India being the top consensus, followed by Southeast Asia, and then after that, I'd say the interest is a bit more dispersed. But I'd like to highlight the column in pink, that is venture capital. So clearly you can see how much investors are looking at India as a venture capital market. So it has a lot of opportunities across different sectors and different ticket sizes. And this very strong demographics has been supporting very good economic growth, both historical and in terms of forecast. So it's definitely been getting a lot of attention in this area. So I think we are an independent data and research provider, which means, we think it's important to offer you both the positives and the negatives view so that we have a more balanced perspective when looking at this market. And I think we've come to this bit where we need to highlight a bit on the challenges of the market. So the sentiment on venture capital has really weakened quite a bit globally. It's not just India, but I would say it's not entirely immune to all of that. So what we're looking at here is the fundraising results in recent years for India-focused funds across different asset classes. Again, venture capital is the pink bit, so it represents what typically represents most of the fundraising in a single year. And you can see after a very record high fundraising year in 2022, where funds raised $7 billion into India venture capital, that has contracted quite substantially in 2023 as investors have really changed their views on this market. And if we look at the deals data, the deals activity, we would see a very similar pattern as well. The chart on the left-hand side, that is India VC deal flow. And if you look at, follow the pink line for deal value, you'd see 2023 is pretty much at a low. It's around half the value we could see in 2021. And if we look at the bars representing the number of deals for volume, we can see that it is actually slightly below pre-pandemic levels as well. That's quite dramatic, I would say, but not entirely out of line with global levels. But because of this substantial drop, if we look at the chart on the right-hand side where we break down VC activity in the region, you'd see that the proportion, the market share of India VC activity in pink, it has come down slightly in 2023, and that is because we have pretty strong activity coming out of Japan. Japan is in bright blue. And even in China, even though China-focused funds are seeing a dry spell in fundraising, VC is one area where their activity has held up pretty well. And so in terms of what's been really changing the mindset of investors, here I'd like to share some data we have on valuations as well as performance to show you what the impact has been on venture capital. The chart here on the left-hand side, first of all, I think is my favorite indicator. We keep track of the percentage of down rounds in VC. So for example, if you look at the dark blue line on top, that represents the proportion of down rounds out of all the deals in a single quarter in VC. So it does reflect the change in market sentiment very quickly. I encourage everyone to look at this, even if you don't specialize in venture capital. It's because it's better than looking at this than, well, I'd say look at this in conjunction with, say, private equity data, because with VCs, the startups, they go to investors much more frequently in order to stay afloat. And so you have much more frequent price discovery, and it's very, very comparable data because you're looking at how much investors are paying for the exact same company over time. And you can see how it really, really captures the market sentiment in a much more real-time sort of way. If you look at the end of 21 or the beginning of 2022, that was a time when funds capital was flowing into VC space at record speed. And that's when you can see there was a bit of that capital chasing deals, and therefore valuations were quite high at the time, and down rounds were at a historical low. I think it's around 4-5%. But as investors, the market sentiment took a turn after the middle of 2022. Interest rates started going up. Deal activity, exits, and all that started to dry up a bit. You can see that has really climbed up very steeply. As of the second quarter of 23, down rounds made up around 15% of all deals that we're able to track, which is actually above the pandemic highs. We can see a very similar pattern in the write-offs and restructuring line in pink. So it really highlights how much investors at this point are scrutinizing the valuations they're willing to pay, as they are not in such a hurry to transact as before. And in terms of the impact, I think it would be good to look at our chart on the right-hand side. This is breaking down median and also the quartile IRRs by vintage year of all the global VC funds that we track. And notice this sharp downturn for 2021 vintage has really gone into negative territory for the lowest quartile. I'd say, of course, for 2021 vintage, most of this is still unrealized IRR, so there's a lot of room for that to change, for the situation to evolve. But it does highlight how much impact investments would see if they were deployed at the peak of the market, and it could take a longer time for these funds to recover in the mid to long term, and that's something that we factor into our longer term forecasts, which I will share also in the end. But of course, so that was a global view. Of course, for India investors, ultimately they'll be interested in then how does India VC performance stack up to all of that? And so I'll show two charts. The first chart is our AIF benchmark that we produced in conjunction with IVCA using data directly disclosed by GP. So again, thank you if you have contributed your data to us. Let's look at the actually the black line on top. That is the AIF Cat1 as a proxy for VC performance. And then look at that in conjunction with the MSCI India in purple. You can see a very clear outperformance there. And then also look at the line in green. That is the Preqin Venture Capital Performance Global. So you can see, I think at the beginning, maybe 2020, the India AIF Cat1 was going at a much flatter curve up than, let's say, global venture capital. But that has really caught up towards 2021, end of 2021, and even actually surpassed that. And even as the global venture capital performance has come down quite significantly, so on if you look back from in an 18 months period from the end of 2021, global VCs has been down by 23%, whereas India has been relatively resilient. Another chart I want to show here is the risk versus return profile of India VCs historically. So on this chart, basically the higher returns are obviously to the top of the chart, and then you have the volatility of the returns, meaning the riskier you are historically, then you'd be more towards the right-hand side of the chart. So India is the smallest green bubble towards the top of the chart, which means that historically returns have been better than some of the key markets we are able to highlight here, and actually been quite efficient at giving that return to investors as well, because you can see how it is almost directly above the purple bubble that is North America. But of course, some caveats in reading this kind of chart is, first of all, you can tell from the size of the bubble that the sample size for India is still small, so it is still relatively a younger market with a little less depth or track record that compared to, let's say, China or North America. But then it is clearly evolving and developing as we speak. And also, this is still just historical performance, which doesn't always speak for future. And so I think it's a good time to think about, what investors are expecting to see in the near term. This is again from our investor survey, where we ask investors about their near-term capital commitments to the different asset classes that they have, and typically it's very correlated with their return expectations. So the way to read this is the dark blue on top represents the proportion of investors that expect to allocate less capital to each asset class, and then the dark blue at the bottom represents the proportion of investors who expect to increase their capital allocations. So first of all, clear winner here, private debt. 50% of respondents expect to allocate more, but then on the other side of that, in terms of the perhaps pain points right now, is venture capital and real estate, where you have more of the bright blue at the top. So venture capital, just a little more than 30% of respondents are intending to decrease their allocations in the short term. I would say we asked the same question over the long term. We see the long-term expectations is a bit better, which suggests there's a bit of pivoting or a little bit of sitting out, maybe one or two more fundraising cycles. But I'd say, despite that, because, like I said, we do this twice a year, we can keep track of the changes. And even for the same question, if we compare to last year's results, I would say we are seeing some return of positivity. If you look at the chart on the left-hand side here first, so that's the question on venture capital commitment plans in the next 12 months. The pink is the last survey that I showed just now, but the dark blue is last year's results. So you can see that there are actually more investors who intend to allocate more capital this time round, and less investors expect to allocate less capital than last year, which is a bit of a move towards a positive direction. And related to that is their return expectations. The last time we did the survey, more than 60% of investors expect performance in venture capital to worsen in the next 12 months. But in this one, we see that has come down to just 30%. And in fact, you can see that there are more investors who expect performance to improve than those who expect performance to worsen, again in the pink columns. So it does show that perhaps due to the downturn that we saw just now, remember the green line, 23% down for venture capital globally, it has investors thinking whether it's time to pick up on some opportunities, maybe it's time to go back in. So overall, it's turning slightly positive. But I think, in terms of looking at the deal flow and fundraising side of things, it might take a little while to see that translate into substantial activity. So in terms of our longer term forecast, we took account into all of that. We account for lower fundraising, lower pace of investment overall in private capital, so that includes venture capital, definitely. Our expectation is that the coming year, we could see a similar to maybe a little bit of downside in terms of fundraising, but actual recovery will be perhaps 2-3 years out. But then in terms of performance, we are going to see some clear correction, especially compared to the last 2020 to 2022, that sort of very exceptional period, which we have highlighted in pink. So compared to that, there is going to be a substantial, overall around a 5-point difference when we look at the next 6-7 years of performance. So we see venture capital coming down to around 14%, but compared to other asset classes, it's still going to outperform. Like we said, like we saw earlier on the down rounds data, there are a lot of opportunities that can be found in the in a much more reasonable valuation than before. So it could be an entry point for investors with a longer term investment horizon. But then, obviously, because of what we saw on the sort of funds that were deployed at the height of the market, it's going to take some time for those to recover as well. So in terms of looking at year-on-year performance, we expect venture capital performance to be quite mixed in the next 12 to 18 months, and that recovery could be quite uneven between the different markets, because we see investors sort of shifting their preferences out of some sectors into newer sectors like AI, for example. That's been very well discussed, I think, through this conference. So because of that, we're going to see a little bit more, I think, overall correction in the next 1-2 years or so, but we'll see much more pickup in recovery towards the end of our forecast period. So I think I'm ending this at a pretty good time. This this is our, all this data comes from Preqin Pro platform or our research insights, research reports. So please, very welcome your feedback and any questions, comments. Please look for myself, Angela, or my team, Uday and Ankit. We're here. We have a booth outside. Please come speak to us, or pick up a Preqin notebook or Preqin pen. Just come say hi. Thank you very much.